So your local government has received some federal funds during the year and you're wondering, do I need a single audit? Let's look at an example of how this works in a local county government. Suppose that this county receives $400,000 in a block grant during the fiscal year, and also this same government receives $200,000 of donated federal property. Well, now we're at $600,000, and the threshold or the trigger for a single audit is $750,000. So in this example, they have expended less than $750,000, and therefore they would not need a single audit. Now notice I use the word expended, and let's talk about what that means in a single audit environment. In the block grant, they spent $400,000, so we can use that word expended. But what about the receipt of the donated property? Nobody expended any money, at least in this local government. Even so, under single audit definitions, the receipt of that donated property is considered expended federal funds. So you would add the $400,000 plus the $200,000 to determine whether or not you have reached the $750,000 level. Now let's add one more wrinkle to this equation, and suppose that this same government had a federal loan due back to the government of $300,000 at the beginning of the fiscal year. Well, you would add that $300,000 to the $400 and the $200, so now we're up to $900,000, and this government has now expended $900,000. And you may be thinking, but wait, this is a loan balance. Nobody expended anything. Even so, under single audit definitions, you would add the beginning balance of that loan due to the federal government to your expended amount. So now we're going to add $400,000 of block grant plus $200,000 of donated property plus $300,000 in federal loans. Well, now we're above that $750,000 trigger, and now this local government is required to have a single audit. Okay, so we've determined that you do need a single audit, and you go out and you contract with a public accounting firm to perform the single audit. What are the objectives for that audit firm, and what do you need to be mindful of as the auditee in the performance of the single audit? So let me give you the lowdown on what the auditor is after when they come to your local government or your nonprofit and they perform the single audit. The first thing is they're going to test the compliance requirements for each major federal program. So in the compliance supplement that's issued by the Office of Management and Budget, and this is updated annually, they'll look at the compliance supplement, they'll look up your particular major program, they'll see the compliance requirements such as allowability or eligibility or reporting. So they'll look at those particular compliance requirements, then they'll test those to see whether or not your local government or your nonprofit has complied with those applicable compliance requirements that are direct and material for your entity. So mainly they're issuing an opinion on compliance in regard to your major federal programs. The second thing that the auditor is doing is they're looking at your internal controls as they relate to these compliance requirements, such as allowability, eligibility, and reporting. So they test the controls in relation to each compliance area that is applicable and direct and material, and then they report on those tests. So two things that the auditor's doing in a single audit: an opinion on compliance and testing of internal controls. So in summary, what we've seen is, in terms of applicability, in terms of you knowing whether or not you need a single audit, add together your federal programs, your federal awards that have been expended in the fiscal year. If they are $750,000 or more, then you'll need a single audit. And then if a single audit is performed, those two objectives: one, an opinion on compliance, and two, there'll be language about the testing of internal controls, although there's no opinion on internal controls. So that, in summary, is the applicability and the objectives of a single audit. Hope that helps. Thanks, and bye now.